Hey guys, and welcome back to the ASX Investor channel and welcome to another CEO interview. Today, we'll be diving into the EV battery materials space once again, and we're revisiting the story of Renascor. ASX RNU has had a stellar start to 2022. The share price has soared by over 80%, and there's a lot of attention on the Renascor story. But most significantly, there's been some major company progression and a number of catalysts as well on the horizon. We're really excited to be welcoming back to the channel CEO and Managing Director, David Christensen. We've had him on previously and had a great discussion about the Siviour Graphite Project opportunity and the broader state of the market. David, welcome back to the channel, mate.
Great, it's a pleasure to be here again.
Fantastic to have you on. Of course, there's been a lot of different news flow in the past period and there's a lot of exciting catalysts up ahead, but maybe for that bit of a refresher, if we can just speak about who is Renascor and what is that opportunity you're really trying to feed into with the Siviour Graphite Project?
Yeah, absolutely. So we're a South Australian-based company, and several years ago, we discovered what's grown into one of the largest undeveloped graphite resources, not just in Australia, but the world. And our strategy is to try to tap into what looks like really booming demand in the electric vehicle space by not just mining the graphite, but by keeping the graphite here in Australia and upgrading it into a purified spherical graphite form. And that does a couple of things. One, it creates a higher value product that we can sell, better margins, that's good for shareholders. But the other thing it does is it gives us 100% direct exposure to the high growth area, which is the lithium-ion battery sector. And we think because of some of the attributes of the deposit itself, we're going to be able to produce at amongst the lowest cost of any graphite development globally. And then in turn, because of our location here in a modern low-risk jurisdiction like Australia, we can do the downstream processing and then pass on that cost savings from the mine to the downstream and really become a tier one producer of a very low-cost purified spherical graphite product. And in turn, our sort of goal as a company is to become one of, if not the largest producers of this product globally.
It is an exciting project, really riding on the tailwinds as well of the electric vehicle demand. Just thinking about the past period, there's been plenty going on, whether we're talking about the announcements with high yields, higher recoveries, of course, some funding confirmation too, also some customer qualification. There's plenty going on. Can you just give a bit of an update in terms of the Renascor progression and some of those highlights that you think investors should really keep an eye on?
Yeah, so I think we last spoke in October, and since that time, we've been racing forward really as quickly as we can on a number of fronts. On the offtake front, it's we entered into a non-binding agreement with, among other, POSCO to sell up to 100% of our stage one capacity, which is really exciting. And now we're looking at producing as much as 200% of our initial stage one capacity. And that's because the market seems to be growing so fast. And the other thing we're doing now is we're racing as quickly as we can to complete a updated feasibility study work that looks at meeting with that new demand. And I guess the other really major piece of news is we got approval for a conditional approval for $185 million loan facility under the critical minerals facility from the Commonwealth government. And that potentially would meet the vast majority of our projected capital costs of about $205 million. And that I think, as far as de-risking events, in particular for battery minerals and things that don't necessarily have very clear pathways towards sales, that was really a major, I think, de-risking event. And I think it's been quite helpful for us, in particular in our offtake discussions, but it's really shined the spotlight on, graphite as a critical mineral, and then Renascor in particular, and the potential that we really are moving forward on that development curve and have, I guess, an increased potential of not just having what looks like a great project on paper, but we're moving progressively closer towards getting into a final investment decision and then construction and can turn this into a reality.
And of course, you are developing that not only with the project within a silo, but it's within that broader graphite market. We've started to see that price signal starting to come through. Everybody's familiar with the electric vehicle demand. I'd love just to hear some thoughts about your outlook on the graphite market, but also how are some of those discussions going with potential customers and some of those insights that may be flowing through?
Yeah, what's happening in graphite, I think, is what was projected when maybe the ASX market first got interested in it in 2014. It's maybe taken a while, but we're seeing the results of a situation where there's just not enough graphite being mined and then turned into a purified spherical graphite form to meet the demand, which is all coming top down from the increased pickup in electric vehicles, which leads to a major need for lithium-ion batteries with projected growth rates of 20, 25%, 30% per annum. And we're starting to see that flow down to the anode makers, who are our customers, and then the need for purified spherical graphite. And we're finally, after a long time, seeing major price appreciation where like we did our initial study work in 2019, and we just adopted a forward cost curve from a price reporting service, Benchmark Mineral Intelligence, and we've already exceeded those expectations where we have prices up to in the mid to high $3,000 per ton, which probably doesn't even reach the incentive pricing to get new production in place. But again, the advantage we might have is because of the attributes of our project, we come in sort of at the low part of the cost curve. And so what's happening overall in the market is the end users are now seeing a supply gap. We saw what this did. We saw this play out I think we're still seeing it play out in the lithium sector in particular last year, and seeing it now, where there's a race to get projects and get them started as quickly as possible to meet this demand. I think we're just at the beginning of what's happening with graphite and purified spherical graphite, where you're going to need a lot of projects in place in order to meet that demand, and you would expect to have positive impact on the price. And I think we're just seeing that happening right now.
And really just spending some time thinking about those feasibility studies. As you mentioned, an upgraded feasibility study due based on that 2019 one. Obviously, a couple of different dimensions that will change in terms of the pricing, but also the potential scale of it. I'd be very fascinated to hear how you're thinking about the staging of that, as well as the potential scale. Obviously, the 28,000 TPA, well, the market's been coming along pretty quickly. So yeah, keen to hear your thoughts on how that's evolving.
Yeah, that's been the major change, and that's happened really fast. I mean, for such a long time, the long pole in the tent, if you will, in the development is when will the offtake come, and when will the market be there, and gosh, that's changed so quickly. When we did we put our integrated study together back in the midpoint of 2020, we didn't have the offtake, and we were looking at producing 28,000 tons, and we were projecting a forward market and a stretch goal. We thought, okay, by the time we get into production, we'll be able to place that amount of material. That seemed realistic in some of the earlier conversations we were having with the anode companies, but that has just raced forward so quickly. And now we have we publicly announced non-binding commitments for up to 60,000 tons, so twice that. So with respect to our planning, I guess that there's a couple of things in play. So on the one hand, it's important that we can get into production, because we need to be able to demonstrate that potential cost advantage on paper exists with an economy of scale in real life. But then, obviously there's the potential to do more. Like, we didn't have a second stage because we didn't know where the market was going. We didn't feel confident enough at that time, but obviously we do. So what we're looking at now, we're looking at staging, and we're working with different numbers right now. And you asked previously about offtake agreement, and that goes hand in hand in trying to meet the offtakers' demand. But we would expect to be producing more in stage one, and certainly additional stages to meet the upcoming demand. And the one advantage we have is in terms of the resource, we can expand that resource significantly. I mean, the resource itself is quite big. We're not resource constrained. The constraint is being able to place that material. But with the demand we're seeing, I think it's reasonable to assume we can, include multiple stages that are going to significantly increase the volume of material we're going to be able to produce. And how we land on that really depends on how we come out with some of those offtake discussions we're having right now.
And so then I guess building on that offtake discussion there, of course, I think the investors are really looking forward to the conversion of some of those into binding offtakes, as well as the possibility on the other side of potentially new offtake partners coming to the fore. How would investors be best placed to view that? And what are some potential timelines that they could look forward to on that front?
Yeah, I mean that goes hand in hand with the feasibility study we're doing to determine how we put that together in the best way. And obviously we're watching a really changing market right now where traditionally graphite in any form, whether in graphite concentrates and purified spherical graphite, has been a buyer's market, and buyers have been able to dictate terms and been able to put the large amount of risk on the producer. And hence that's why we haven't gotten significantly more production, because most of the burden has been on the producer. But that's starting to change right now. And I guess from our perspective, what we want is we want to be able to give our shareholders the benefit of the appreciating graphite price. But at the same time, we want to be able to meet any potential debt burdens associated with the loan facility that we're working on with Export Finance Australia and the critical mineral facility. So it's sort of those things go hand in hand in how we ultimately sort of close those agreements. And I know everybody's eager for us to get very as quickly as possible to binding agreements. We are, of course, ourselves, but the important thing to keep in mind is it's quite critical we're able to maintain the upside and where the market's going, because if we're guided by the trajectory where the price is going, it's only going up from here. And our goal is we want to be able to capture that value.
There is plenty of potential milestones along the journey. I think when we're thinking about that pathway towards ultimately construction, then production, what are those timelines and those key milestones on the journey? Of course, we know the pepper approval as well is something that you're awaiting too. Yeah, I'd be keen to hear about those timelines moving forward.
Yeah, so look, I guess, as we move forward through 2022, we're working on multiple fronts. On the regulatory front, obviously, we want to get the approval for the mine, and we've submitted our PEPA application in September. We're working with the mines department to get that final approval in place, and that obviously is a very big de-risking event. We're also on the downstream, very close to making a site selection, and it'll be approved process will accompany that. And then on the technical side, we want to optimize all of this in an integrated project, and that's the feasibility study work we planned on. And then obviously on the offtake side, we want to convert those into binding so we can unlock the financing. So, very broadly speaking, we would view over the next few months as we move forward through 2022, we want to tick off all of those boxes so that we can make a final investment decision this year. And that would hopefully unlock the funding that would permit us to commence construction. And then, largely 2023 would be construction. And then by 2024, we hope to be producing and selling product.
An exciting timeline to continue to look forward to. I know you've obviously been very busy looking forward or looking internally towards the company, but externally, we've seen the share price. You've experienced a significant re-rate with ASX RNU. Last close, I think above that 30-cent mark, $600 million plus worth of market cap. ASX inclusion in the quarterly rebalance too. Plenty going on there. Just some reflections. How are you reflecting on all of that with the market attention coming towards Renascor?
This is what we've always wanted, because I think graphite, as I think you mentioned in last time we spoke, has been maybe the forgotten battery mineral, and everybody's been trying to find a way to get the exposure to the battery space. And we think our strategy is really quite simple, and the more people look at it, we think the better. And again, we think there's going to be lots of beneficiaries in the graphite sector because it has been forgotten. And obviously we've benefited from some of that exposure recently, but again, we're not the only ones. I think we've been telling, I think for a while that from our stage 1 production, you would need 90 Siviour-sized projects over the next 10 years to meet demand. And I think the market's waking up to that. I think maybe from an investment standpoint, if I'm being honest, a lot of investors were probably bitten by investing too early in the graphite plays, and now they're having a second look. And I think it's quite timely, because I think we're still at the beginning of a real significant upward trend, because the industry as a whole has a major problem in the EV sector where there's going to be a bottleneck in raw materials. We've seen what's happened with other battery minerals, and it's only starting to happen to graphite right now.
There is so much going on. It's such an exciting sector that's attracted a lot of attention. Love just to hear any final reflections for those longer term shareholders who have followed Renascor, or some prospective shareholders who might be watching the journey. Any things that they should look out for moving forward?
Yeah, look, I think the underlying message is we're at the beginning of what we think is a real paradigm shifting event in graphite. And graphite's been slow to gain the momentum, but now it's moving forward at a pace that really can't stop. And we're seeing those increases in aggregate volumes, sort of double, treble, quadruple, and then the volumes get big and they get big very quickly. And in terms of what that means for us, I think for Renascor and where Renascor is going, we view our fundamental goal right now is we want to get into production. We want to get into production as quickly as we possibly can. And once we do that, we want to expand our production. We want to expand our production and become not just one of the largest, but perhaps the largest producer of purified spherical graphite, certainly outside of China. And then the opportunities going forward from that are really to, potentially start partnering with some of the anode customers as the EV market expands even further. So, we think we're still just at the beginning of stage one, and the potential as we move forward, if we're able to execute on getting up and running, then obviously the potential moving forward, just on a volume basis is really quite impressive. You get economies of scale, and then you can really take a foothold of the market. Is that, it's not often that commodities grow where you need 90 new projects over 10 years. And we're just at the beginning of what looks like a really exciting trend. And we welcome anybody who wants to learn more, because we think there's lots of room to go.
It is a fascinating space, a fascinating project as well with Siviour. That's the Renascor story. It's ASX RNU. If you've enjoyed the video, don't forget to hit the like button. Feel free to share it out. We make daily videos, so make sure you've subscribed and turn your bell notifications on. David Christensen, it's always a pleasure catching up. Looking forward to catching up again on the journey towards production for Renascor. Thanks for joining us, mate.
Great. Thanks again.